When I first started trading binary options, I came across a great strategy for trend trading. Honestly, the results blew me away, and since then, I've been using it consistently. The strategy is called back to trend, and the beauty of it is how easy it is to find charts with the right setup. And it's beginner friendly, and this inspired me to create a tutorial for you guys. So get comfortable, grab your drink of choice, and let's get started. Every strategy I share with you goes through serious testing. Because trading binary options is my primary source of income, I only keep the ones that can ensure I'm not working 9 to 5 at a fast food chain or exhausting myself at a factory lane. Here's how it works. Find a chart where the price was following a global trend, broke through it, and reached a support level. At these levels, the price typically enters a consolidation phase. The end of this consolidation is when the price breaks out in the direction of the global trend. And this would be your entry point for the trade. In these conditions, the consolidation can also be considered a pullback, but it's a pullback with a breakout of the trend line. The key here is confidence. You enter the trade as soon as the price exits the consolidation. The price movement potential is roughly the distance between the start of the breakout and the beginning of the consolidation phase. Why does this strategy work so well? It's because no matter how strong a trend is, price movements are never a straight line. Price action always follows the pattern of the trend movement to the pullback. Even if the pullback breaks the trend line, it's only a matter of time for it to reverse back toward the global trend. This strategy is designed to catch that reversal. Additionally, during consolidation or pullback, you might spot a chart pattern forming. That pattern becomes an excellent additional signal to confirm your trade. I'll break that down for you right now. Alright, let's break down each step of this strategy in detail. As I mentioned, you can use the back to trend strategy on any chart, any asset, and any time frame, as long as you spot a similar setup with a trend line breakout. The price needs to be moving in a strong or moderate trend. This strategy doesn't work in sideways markets because it's designed to trade a return to the global trend, so that trend has to exist. For a downtrend, draw the trend line above the price action. For an uptrend, draw it below. It's important to draw your trend line correctly to determine whether this strategy is applicable. Identify at least 2 key points, preferably 3, and draw a straight line through them, extending it to the right. Like I mentioned earlier, consolidation can also form different patterns, both reversal and continuation. For instance, here's a common scenario. After breaking the trend line, the price tries to break a resistance level twice but fails, then moves back toward the global trend. What reversal pattern do we see here? Exactly. It's a double top. In this situation, the potential price movement based on the strategy equals the price movement based on the pattern, because the breakout's height matches the height of the double top. Here's another scenario. During the pullback, the price tests a level repeatedly but bounces off it with decreasing strength. In this case, the breakout of the trend line forms a triangle continuation pattern. Remember, the price movement potential for a triangle is equal to its initial impulse, which often matches the trend line breakout. Hopefully, this all makes sense. But if I missed anything, let me know in the comments. That helps me make my next videos even better for you. Now, let's lock in everything we've learned by looking at real charts. Here's a chart where we can apply the back to trend strategy. Notice the key condition right off the bat. A clear trend movement. Start by drawing a trend line through 2 key points. You'll see that the price has already broken this trend line. So what's next? If the price breaks the trend line and enters a consolidation phase, wait for the breakout of that consolidation to enter the trade in the direction of the global trend. Draw your support and resistance levels. Based on the volatility, the price appears to be in an accumulation phase, meaning the breakout will likely be highly volatile. Be cautious when choosing your expiration time. Now wait for the price to break the support level. Once it does, enter a short trade for 8 minutes. Since we're on a 2-minute time frame and the breakout height is equivalent to 4 candles, that should be enough. And there it is. Just as the strategy's name suggests, the price has returned to the trend movement. Now, uptrend example. Let's apply back to trend to an uptrend. On this chart, we have a moderate uptrend followed by a sharp, impulsive breakout of the trend line. After the breakout, the price consolidates. Notice the RSI indicator. It shows the asset is oversold at the end of this downward impulse. Also, check out the candle wicks in the consolidation. They're being pushed upward. All of this confirms a strong setup for entering a long trade. Now, wait for the price to break out of the consolidation and enter a long trade for 20 minutes. Why 20 minutes? Because the potential price movement matches the breakout height. In this case, the breakout consists of 5 candles. Since we're on a 3-minute time frame, multiply 5 by 3 and add a little extra buffer in case the price retests the trend line. And look at that. Just as we anticipated, the price impulsively returned to the trend, even retesting the trend line. We nailed it. If you've made it to this point in the video, congrats. You now have everything you need to dive into trading with this strategy. As always, thanks for watching. Don't forget to like, subscribe, and comment below. I really appreciate your support. I'll see you in the next video.